So, what were the market drivers? What's behind the drop? Number one, trade war 2.0. Trump tariff threats jolt global outlook. President Donald Trump hinted at sweeping new tariffs, 50% on EU imports and 25% on foreign manufactured smartphones. That directly targets major players like Apple, which fell more than 6%, dragging the broader tech sector with it. Markets fear a retaliation spiral from EU and China, reigniting fears of a global trade war just as supply chains have begun to normalize post COVID and post China de risking. Two, bond market blues. Yields break higher on weak auction and credit fears. Bond yields surged again. The 30-year Treasury yield briefly topped 5.03%, its highest since 2023. The 10-year yield also climbed, driven by poor demand at the $16 billion Treasury auction earlier this week and investor concern over the $3.8 trillion projected deficit tied to Trump's new fiscal bill. The bond market is flashing red about US creditworthiness, especially after Moody's downgraded the US sovereign credit outlook, citing fiscal indiscipline and political dysfunction. What are the sectors to watch? Tech and retail feel the heat. Technology, Apple led declines and semiconductors followed suit. The Philadelphia Semiconductor Index dropped over 1.5%. Traders fear margin compression as tariffs could raise input costs for devices and components. And in retail, Kohl's plunged nearly 8% after earnings missed expectations and foot traffic trade data showed soft consumer spending. The retail sector is struggling with inflation fatigue and weak guidance heading into summer.